Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good evening, ma'am and friends. We are from Group 1, consists of myself, Paransky Fari, and my other two friends, Bintang Nuraini and Firdaus. We are from Group 1, are about to present our study case about the analysis of external auditor integrity case in Ernst and Young and Toshiba. So without further ado, let's jump into the discussion. Uh, before we discuss about the case, first we need to introduce the case of what we are going to be talking about. So problems with integrity can be experienced by any auditor. Our group take the example of the integrity of the external auditor Ernst and Young Shin Nihon with the parent the Toshiba company in Japan, where the media spotlight is overstated profit reach. The case is interesting because of the irregularities that it committed. Toshiba was recently exposed in early 2015 by an independent investigative committee from outside the company. Meanwhile, Ernst and Young, the external auditor, could not detect it to Toshiba error. Theoretical study of Ernst and Young's mistakes as auditors in this paper is still in the form of analysis and assumptions due to limited sources because of the truth that Ernst and Young's violation has not been revealed integrity to the public. While other sources to find deviation in Toshiba comes from the news from both Indonesia and the US, reports, investigative, and comparative financial statements could not be achieved. So the objective of this case is first to know the definition of integrity. The second is to know the deviation made by the Toshiba Japan. The third objective is to analyze deviation made by Ernst and Young in auditing Toshiba. And the fourth one is finding preventive suggestions and solution. Before we discuss the case, we need to understand the definition of integrity first. The first definition of integrity is based from IAPI. So based on section 104, the Code of Ethics for the Public Accounting Profession as translation, with modification of the Code of Ethics for Professional Accountants stipulated by the International Ethics Standard Board for Accountants, or IESBA, issued by the International Federation of Accountants, or IFAC, explains that the basic principle of professional ethics, one of which is the principle of integrity, namely that every practitioner must be firm and honest in establishing professional and business relationship in carrying out their work. This definition is clarified by the presence of section 110, which explains that first, the principle of integrity requires every practitioner to be firm, honest, and fair in their professional and business relationship. The second is that the practitioner should not be associated with report, communication, or other information that he believes contains A, material errors or misleading statements, B, statements or information given inadvertently, or C, omission or concealment which may mislead the information that should be disclosed. The third is that the practitioner doesn't violate paragraph 110.2 of this code if he or she provides a modified report on the matter set out in paragraph 110.2. The second definition of integrity is based from the Public Accountant Code of Ethics regarding integrity according to the Public Company Accounting Oversight Board, or PCAOB. Based on PCAOB section 102, what is meant by integrity and objectivity are as follows. Integrity and objectivity in the performance of any professional service, a member shall maintain objectivity and integrity, shall be free of conflicts of interest, and shall not knowingly misrepresent facts or subordinate his or her judgment to other. A conflict of interest may occur if a member performs a professional service for a client or employer, and the member or his or her firm has a relationship with another person, entity, product, or service that could, in the member's professional judgment, be viewed by the client, employer, or other appropriate parties as impairing the member's objectivity. If the member believes that the professional service can be performed with objectivity and the relationship is disclosed to and consent is obtained from such client, employer, or other appropriate parties, the rule shall not operate to prohibit the performance of the professional service. Also, there are several rules regarding integrity. And the first rule is ISQC1, which is the quality control for companies conducting audits and review of financial statements and guarantees and services related to other agreements. This rule deals with a company's responsibility for its quality control system for the audit and review of financial statements and other assurance and related service engagements. Based on and this second rule is ISA 200, namely overall objectives of the independent auditor and the conduct of an audit. This rule relates to the overall responsibilities of an independent auditor when conducting an audit of financial statements in accordance with the ISAs. ISA 200 also describes the scope, powers, and structure of the ISA. The third rule is ISA 210, namely agree to the terms of the audit agreement. This rule deals with the auditor responsibility in agreeing the terms of the audit engagement with management and those charged with governance. This rule also establishes certain prerequisites for an audit and the responsibilities that lie with management and those charged with it. The fourth rule is ISA 220, namely the quality control for financial statement audits. This rule deals with the auditor's specific responsibilities regarding quality control procedures for the audit of financial statements. And this rule is also addresses, where applicable, the responsibilities of the reviewer's quality control engagement. And the last rule is ISA 240, namely responsibilities of auditors related to the fraud in financial statement audits. This rule deals with the auditor's responsibilities relating to the fraud in the audit of financial statements. All right, in this next slide, we will begin to discuss the case of Toshiba Company and Ernst & Young, which will be presented by Firdaus. For Firdaus, time is yours.
Okay, thank you, Farhan. And next, we jump to the next chapter, chapter 3, about a discussion. So Toshiba is a company founded in Japan from 1875 until now, which means it has been around for 140 years. Toshiba has produced many products, including computers, semiconductors, electronic devices, and many others. Toshiba also has 247 subsidiaries in various countries. As a company founded in Japan, a country that has a culture of same hard work, independence, innovation, and other good cultures. This case certainly left black ink on the Japanese government, even though Toshiba is not a government-owned company. Toshiba is expected to have an excellent organizational culture, but in 2014, a shocking accounting scandal emerged where there were irregularities committed by Toshiba. The independent committee discovered these irregularities. The main discrepancy is the overstated profits, which reached 151.8 billion yen, or 1.22 billion US dollar, since the 2008 fiscal year of the last 6 years, and the situation was at knowledge for what is why by Toshiba's top management. Overstated profit can occur not because of economic factors, but precisely because of non-economic factors, namely the corporate culture where subordinates cannot fight superiors. Indeed, even in Japan, there is a culture of respecting elders or seniors, but in fact, this culture has led to deviation for Toshiba. Problem within the company initially occurred because managers set unrealistic targets to achieve. From there, many other issues arise because employees are trying in any way to achieve the expected target. In addition to irregularities within Toshiba, which have been widely reported in news, Ernst and Young's role as Toshiba auditor for 12 years from 2002 2014 will also be analyzed. And then this is error from Toshiba. Toshiba's management enforced a performance target policy for the company, in which the company is required to meet predetermined targets. This creates pressure in the Toshiba work environment and cause division manager to feel guilty if the set target cannot be achieved. The Japanese are known as a nation that uphold self-respect. So if the target set by management cannot be achieved, they feel inferior and feel they have failed. Apart from being a culture problem, this manager also want to get a big bonus from the performance target system imposed by Toshiba management. The intention emerged from these individuals to inflate the revenue or profit earned by Toshiba so that they could get a lot bonus and make it appear that the Toshiba company was progressing very rapidly. The next mistake or flaw from Toshiba's management is the lack of direct supervision by superiors to their subordinates, so that when these individuals at Toshiba inflated Toshiba income, management did not know about this and instead gave a bonus to these elements. Management also trust the individuals who inflated Toshiba's revenues, so they never carried an inspection of the legitimacy of the income they earn. And the next error from Ernst and Young. Of course, problems like this could not have occurred if the external auditor from Toshiba, namely Ernst and Young, could detect fraud committed by elements at Toshiba. The first thing that can be directly concluded from this case is the inaccuracy of the E&Y auditors in checking Toshiba's internal control system. If E&Y really test Toshiba's internal controls, surely E&Y will be able to find inflated funds committed by Toshiba's individuals, especially considering that the amount of revenue inflated by Toshiba individuals was very large, reaching 151.8 billion yen since the 2008 fiscal year or the last 6 years. The next possible mistake that E&Y might have made was setting the material level too high. Considering that Toshiba was one of the companies that had a very good reputation prior to this scandal. Because of these errors that might have been categorized as materials errors were instead classified as immaterials error. Not to mention that this 151.8 billion yen was distributed over 6 years. There will be reducing E&Y's suspicion of fraud within Toshiba's management. And the next flaw that might be made by E&Y is that there is no prohibition for a CAP to audit the same company as long as the audit partner of the CAP is rotated for 5 years. This can lead to failure to achieve the independent state of mind, which of course affects the opinion of the CAP concern because familiarity arises between the company, in this case Toshiba, and the CAP concern, namely E&Y. And then based on the case that occurred between Toshiba and E&Y, there was a violation of ISA 240 and 315. And for ISA 200 discuss the overall responsibilities of an independent auditor when conducting an audit of financial statement in accordance with the ISA. And then for the 240, discuss the responsibility of the auditor relating to fraud in the audit of financial statement. And for 315, discuss the auditor's responsibility to identify and assess the risk of material misstatement in financial statements through understanding the entity and its environment, including the entity's internal control. And the violations in this case are proven by the malfunctioning of internal controls and the occurrence of material misstatement for years. which is a violation of ISA 315 and the inability of the ENY to detect material misstatement, which is assumed that the ENY does not follow the established audit procedure, which is a violation of the ISA's 200. The case of profit inflation in the financial statement amounting to 1.2 billion US dollar, which is a violation of ISA 240. And from the result of the group search, it was found that ENY himself had been an auditor at Toshiba for 12 years, starting in 2002. This could have made ENY's partners believe in the results of Toshiba's financial reports. While as auditors, we must maintain professional skepticism. Familiarity is possible in the case of Toshiba and ENY. It is very unlikely that the ENY, who has been auditing Toshiba's financial statements for 12 years, does not create or risk assessment procedures and is aware of the risks that occur in Toshiba's financial statements. This is what strengthens the author's opinion that ENY made a wrong opinion on Toshiba's financial statements. And last, most of the press blames Toshiba for overstated profits, such as the Forbes website and the Reuters website, but there are also media that judge ENY for allowing deviation by Toshiba. Next will be presented by Bintang. Time is yours.
Okay, thank you, Firdaus. So we're going to advices to Toshiba and ENY. Next, Farhan. Through the background of the problem and theoretical studies, Toshiba has indeed been proven to have made a mistake, and this mistake is a fatal error and has been running since 2008. We have some suggestion for Toshiba, but preventively and suggestion for events that have already occurred. The following are suggestion as a precaution. First, have a more binding policy. The purpose of the sentence is for Toshiba to make a policy with the existence of this policy. It is less likely for people within the company to commit acts of fraud. One example of its policy is to apply very severe penalties for perpetrators of such fraud, such as posting his name on the Toshiba website with a statement that he is the perpetrator of the fraud. That way, there will be no companies that want to work with that person. This policy will certainly make people who work at Toshiba reluctant to commit fraud. Second, don't get too fixated with the culture that it exists in a country. Based on our search results, we found that in Japan there is a culture of respecting seniors. Maybe this is what causes the case at Toshiba to be revealed after all this time. It is possible that employees at Toshiba actually know about the bad things that have been done by their seniors, but these employees are reluctant to reprimand and report them because of this cultural element. Third, have a stronger internal control. As we know, the existence of internal control aims to achieve a company goal and avoid commendable actions. This internal control is regulated by COSO. According to COSO, internal control aims to ensure that financial reporting is presented correctly, operation within the company run effectively and efficiently, and that all parts of the company comply with applicable laws and regulations. So let's emphasize the purpose of internal control according to COSO on financial reporting. If financial reporting is not presented properly, then the internal control within the company can be said to be weak, right? In addition, internal control itself aims to ensure that everyone in the company complies with applicable regulation. In this case, Toshiba clearly violated applicable regulation. Because of that, the strength of internal control is needed to prevent undesirable things from happening, such as in the case of Toshiba. Next. In addition to advice from a preventive perspective, we also have advice for Toshiba in dealing with this problem that has already occurred. It's just that because the suggestions we provide aim to save Toshiba's good name, then one of these suggestions will deviate from the value of integrity. In fact, if Toshiba wants to live up to the value integrity, it will be like opening up its own disgrace because the value of integrity means being honest and responsible. If Toshiba was honest and exposed its mistakes, wouldn't that just make its name worse? The following are our suggestion for Toshiba in dealing with this case. First, the role of shareholders in the company's financial statements. So if the shareholder is allowed to interfere in financial reporting, the shareholder will certainly ask the management where such large profits come from, and the shareholder will certainly ask for proof. Shareholders themselves have the right to ask questions at the general meeting. Therefore, it will be nice if shareholders have a stake in the company's financial statements. Second, firing the people who were involved in this case. We say that the suggestion deviates slightly from the value of integrity. Supposedly, it would be better if Toshiba took legal action to let the public know about what actually happened. However, we do not support this because the problem will only get bigger and Toshiba's name will be worse and worse for a long time to come. And the last is strive to always be open in providing data or information requested by the public accounting firm. This suggestion highly upholds the value of integrity because Toshiba should be honest in conveying its information instead of exaggerating its profits. If we think about it carefully, isn't it better to be honest and open that to be dishonest and in the end destroy Toshiba's good name, which has been built up over the years. Maybe that's all my explanation. I will give it to Farhan.
Okay, thank you Firdaus and Bintang for your explanation. With the final explanation from Bintang, that concludes our presentation for today. We would like to thank you, man and fans, for watching. And don't forget to like, comment, and subscribe our channel. And we'll see you in the next one. Assalamualaikum warahmatullahi wabarakatuh.